Have you ever wondered why some people build wealth effortlessly, while others struggle for years? What if I told you that the key to financial success is not how much you earn, but how you invest it? Today, I'll reveal the best ways to invest your money if you're under 30. Strategies that can set you up for financial freedom sooner than you think. And no, this isn't about working longer hours or cutting out coffee. It's about smart money moves that will make your cash work for you. Most young people make the same mistake with their money. They either save without investing or spend everything without thinking long term. The truth is, if you're in your 20s, you have one massive advantage over everyone else: time. Investing early means you don't have to put in huge amounts to see massive returns later. But most people don't realize this until it's too late. Another issue: fear and lack of knowledge. Many young people believe investing is complicated or requires a lot of money, so they avoid it and miss out on years of growth. If you don't start now, you could spend years trying to catch up later. But if you invest strategically today, you can build wealth effortlessly over time. In this video, I'll show you exactly where to put your money today. No fluff, just practical steps that work. Most people think investing is only for the rich. But the truth is, starting young gives you the biggest financial advantage possible. Why? Compound interest. It's what makes your money multiply over time. The earlier you start, the longer your money works for you. For example, if you invest $100 a month at age 20 and earn an average 10% return, by the time you're 50, you'll have over $200,000. But if you wait until 30, you'd have only $75,000, just half the amount. That's why wealthy people start early and stay consistent. They don't try to get rich quick. They let time do the work. The biggest regret of older investors: not starting sooner. And the best part? You don't need a lot of money to begin. You just need to start. Investing without a plan is like trying to drive without a map. You might move forward, but you'll have no idea where you're going. That's why having an investment strategy is key. The first step: set a clear goal. Are you investing for retirement? A big purchase? Financial freedom? Your strategy will depend on your timeline. Next, decide your risk level. If you're under 30, you have one major advantage: time. This means you can take more calculated risks, like investing in growth stocks, startups, or real estate. But here's the trick: diversification is everything. You don't want all your money in one place. Spread it across stocks, ETFs, crypto, and even a side hustle. The goal is to build a portfolio that grows steadily, without exposing yourself to too much risk. Invest smart, stay consistent, and you'll be ahead of 99% of people your age. Most young people think investing in the stock market is complicated, but it's actually way simpler than it looks. First, understand what you're buying. When you invest in a stock, you're buying a piece of a company, meaning if that company grows, so does your money. There are two main ways to make money in stocks: capital appreciation when the stock price goes up, and dividends when companies share their profits with investors. But here's the secret: you don't need to pick individual stocks to succeed. Most successful investors, like Warren Buffett, recommend index funds or ETFs. These automatically invest in hundreds of companies at once, reducing your risk. The key: start small, but start early. Even investing $50 or $100 a month consistently can turn into hundreds of thousands over time, thanks to the magic of compound growth. Start now and let time do the heavy lifting. If you don't want to stress about picking individual stocks, index funds and ETFs are your best friends. Think of them like a basket of stocks. Instead of betting on just one company, you invest in hundreds or even thousands at once. This lowers your risk and still gives you solid long-term returns. For example, an S&P 500 index fund lets you invest in the 500 biggest companies in the US, including Apple, Amazon, and Google. Over the past decades, it's returned about 10% per year on average. And the best part, they require zero effort. You don't need to check the market daily or make constant trades. Just set it and forget it while your wealth grows over time. If you're young, time is your greatest advantage. So start early, stay consistent, and let compound interest work its magic. Want to get paid just for holding stocks? That's exactly what dividend stocks do. Companies like Coca-Cola, McDonald's, and Johnson & Johnson share their profits with investors every quarter. Whether the stock price goes up or down, this means you earn passive income just for owning them. Imagine this: if you invest in solid dividend stocks and reinvest those payouts, your money compounds even faster. Over time, those small payments can grow into a massive stream of passive income, enough to cover bills, rent, or even let you retire early. The key? Look for companies with a strong history of increasing their dividends and avoid those with unsustainable high yields. The goal isn't just a big payout today. It's long-term, growing income. If you start now, by the time you're 30, you could already have a steady stream of money working for you, without lifting a finger. Some people became millionaires overnight, Others lost everything. So, is it a smart investment or just a gamble? The truth is, crypto isn't going anywhere. Bitcoin, Ethereum, and other major coins have revolutionized finance. But unlike stocks or real estate, crypto is highly volatile, meaning prices can skyrocket one day and crash the next. The key is understanding the risk. Crypto should be a small percentage of your portfolio. Think 5 to 10% max. That way, you get exposure to the upside without betting your entire future on it. Want to invest? Start with established projects like Bitcoin and Ethereum. Avoid hyped-up meme coins, and never invest money you can't afford to lose. Used wisely, crypto can be an amazing tool for building wealth at a young age, but only if you treat it as an investment, not a lottery ticket. Most young people think real estate investing is impossible without a huge down payment. But here's the secret. You don't need to own property to profit from real estate. One of the easiest ways is REITs, real estate investment trusts. These are companies that own and manage properties, and when you invest in them, you get a share of the profits, without buying a house. Another strategy, rental arbitrage. This is when you lease a property long-term, then rent it out on platforms like Airbnb for a higher price. It's a low-cost way to start making money from real estate without actually owning anything. For those willing to be creative, real estate is still one of the best wealth-building tools. You just need to use the right strategy for your situation. Instead of waiting years to buy your first house, most young people think side hustles are just for extra cash. But the real wealth comes when you reinvest that money instead of spending it. Let's say you start a freelance gig, reselling sneakers, or flipping items online. Instead of using that first $500 on a new phone, put it into something that grows. One of the best strategies? Take profits from your side hustle and reinvest into skill building. Learning digital marketing, coding, or sales can increase your earning potential forever. Another move? Use your earnings to scale the hustle itself. If you're making money with print, on-demand, content creation, or e-commerce, reinvest in better tools, ads, or automation to multiply results. Your side hustle should feed your investments, which eventually lets you escape the paycheck-to-paycheck cycle, while your money keeps working for you. One of the biggest reasons young investors fail is because they make avoidable mistakes that cost them years of progress. First, trying to get rich overnight. Chasing get-rich-quick schemes or jumping into investments without research is a fast track to losing money. If something sounds too good to be true, it usually is. Second, not diversifying. Putting all your money into one stock, one crypto, or one asset is a huge risk. A well-diversified portfolio spreads out the risk and helps you build steady long-term gains. Another mistake. Letting emotions control decisions. Markets go up and down, but selling in panic or buying in hype usually leads to bad choices. The key: stick to your strategy, be patient, and focus on steady growth. The smartest investors understand wealth is built over time, not overnight. So, you've got your first $1,000 saved up. Now what? The way you invest this first $1,000 will set the tone for your entire financial future. The first rule: don't let it sit idle. Money in a savings account loses value over time due to inflation. Instead, put it to work. Start with low-cost index funds or ETFs. These offer steady, long-term growth without requiring constant management. If you're comfortable with a little risk, allocate a portion to individual stocks, dividend-paying assets, or even crypto. The real secret: keep adding to it. Consistently investing even small amounts, $50, $100 per month, creates a snowball effect that can grow into a massive fortune over time. The best investors aren't the ones who make one big move. They're the ones who stay consistent and let time do the work. Right now, you have a choice. You can ignore this advice and let time slip by, or you can take action and start investing, even if it's just a few dollars at a time. Every wealthy person started somewhere, and the biggest difference? They started early and stayed consistent. The best part? You don't need a finance degree or thousands of dollars to begin. You just need the right mindset and the discipline to keep going. Because the money you invest today could be the key to your financial freedom tomorrow. If this video helped you see a better path to wealth, don't let the knowledge go to waste. Take action today. Hit the like button if you found value in this. Subscribe for more strategies on growing your money. And drop a comment below. What's your first step after watching this? Your future self will thank you for starting now. Building wealth while you're young isn't about luck. It's about making smart moves early. The choices you make today will shape your financial future. Imagine looking back 10 years from now and realizing you made the right decisions when it mattered most. So don't wait. Start investing, start growing, and start winning. Your future self will be grateful you took action today.